We started with 1,000 BTC cap, so roughly $100 million, and it filled up pretty quickly. And then a couple of months later, we raised it from 1,000 BTC to 3,000, and that one literally within 24 hours was gone. But if a lot of people are actually using this L2 and they're benefiting from it, like how does the value sort of like accrue back to the STX holder? And I feel like now projects are reaching that level of maturity that it's not just initial experimentation, it's not just building the thing, but it's actually maturing to real usage and then generating protocol revenue and then figuring out what happens with the protocol revenue.
Muneeb Ali back on Coinage, the founder of Stacks. Muneeb, it's good to see you again, man.
Yeah, awesome to be back here.
There's a lot of things to dig into, and I guess we might as well just start with a big announcement in terms of some of the updates and changes coming to Stacks, what people should be excited about on that front. It kind of speaks to a larger trend we're seeing about projects finally leaning in to giving value back to the people using these networks. Muneeb, what kind of went into the thought process here?
Yes, I feel like the last year, the two of the biggest things that happened in the Stacks ecosystem were the Nakamoto upgrade. Think of that as like really fast speed. And the second thing was sBTC, which is the L2 Bitcoin asset, which is fully decentralized, open source, one-to-one backed by Bitcoin. And I think once you have Bitcoin flowing around in the L2, so right now it's capped at 3,000 BTC, so roughly $300 million of Bitcoin, which filled up very, very quickly. I think naturally that led to, as more and more capital in terms of Bitcoin comes into Stacks and people are actually using their Bitcoin on these fast rails, they're using all these applications and Bitcoin DeFi is growing within Stacks. Like how does like value sort of like accrue back to the STX holders? Because I think the analogy would be that, if Bitcoin is sort of like a highway and it's congested, Stacks is like a more modern highway right next to it, where you can pay a small toll and use it, and it's fast, it's cheap, and it has a lot of like new capabilities. Right? But if a lot of people are actually using this L2 and they're benefiting from it, like how does the value sort of like accrue back to the STX holder? So there are some token economics changes, which I'm very, very sort of like excited about because the model really works out. But at the high level, effectively, as users bring in their Bitcoin into Stacks and they use it here, there are fee mechanisms, there are mechanisms for sort of like generating protocol revenue that accrues value sort of like back to STX, and that's the high level. And I feel like now projects are reaching that level of maturity that it's not just initial experimentation, it's not just building the thing, but it's actually maturing to real usage and then generating protocol revenue and then figuring out what happens with the protocol revenue.
Yeah, and I feel like that is, part of the life cycle of a project in terms of first, it's kind of, the white paper explaining why the project's needed, and obviously in terms of what Stacks has always been about in terms of bringing Bitcoin and usability around Bitcoin, leveraging the security of Bitcoin to all of these other ecosystems. It kind of started with that. And now we're kind of getting into the chapter of the other ecosystems piece. And where I just saw you last was out in Dubai for SWI Basecamp, and you made the announcement that sBTC would be coming to SWI, which I think was really cool to see. And you and I have talked about kind of things that can be done for Solana's ecosystem there as well. So how does kind of this new push around the tokenomics and maybe perhaps around the treasury kind of fit into, I guess, doubling down on the usability and utility of what Stacks is trying to do, not just for kind of, a Bitcoin layer 2, but in all these ecosystems?
Yes. So I feel like there are definitely sort of like two tracks the way we are thinking about it. One is our focus on what we call the local Bitcoin economy. And by local, we don't really mean L1 because there isn't a lot of functionality that's going to happen on Bitcoin L1. We really mean Stacks L2, which is very, very tightly integrated with Bitcoin. And we think most of the payments use cases, DeFi use cases, lending, borrowing, is actually going to happen locally close to Bitcoin, like how Stacks is integrated. With that said, there are other ecosystems outside of Bitcoin, and they change like every cycle, right? Like, for example, Solana is seeing a lot of users this cycle, SUI is seeing a lot of users this cycle. And we want to reach out to those users. We want to take Bitcoin to where the users are, give them exposure to Bitcoin, and then open almost like this two-way street, right? Like because that helps them discover stacks, that helps them discover Bitcoin DeFi, and I think that's a generally a very healthy thing. So in at a high level, I think we remain focused on the Bitcoin local DeFi economy, but we want to open up these two-way bridges to wherever the users are. And I think the Solana and the Sui ecosystems are sort of like one of the leading ones right now.
Yeah, they definitely are in terms of like the consumer applications piece, and now seeing kind of, I mean, Dubai was stacked out there. There was a lot of people out at the Sweet Basecamp event, so it was kind of fun to see and fun to MC as well. But one of the other pieces too, while I'm speaking about coinage, is CoinEject Dike, our validator arm, also spinning up a signer for people to stack stacks with us, which I think is pretty exciting and a lofty goal in terms of, I guess, again, you mentioned the caps and raising the caps and letting more people start to interact with the Stacks ecosystem. Talk to me about kind of what the goals are there in terms of whether it is institutions or retail and how you want to get there. It's a big goal, 21,000 Bitcoin being made productive and the checkpoints along the way. I mean, how do you see that shaping up in 2025?
Yes. So I think when sBTC launched in December, we started with 1,000 BTC cap, so roughly $100 million, and it filled up pretty quickly. And then a couple of months later, we raised it from 1,000 BTC to 3,000, and that one literally within 24 hours was gone. So we were seeing great demand. We're raising the cap again pretty soon, and I think we expect a lot of demand for that as well. And one thing that I feel very proud of in the Stacks ecosystem is that we've always had the approach of sort of like slow and steady, always do the right thing. There are no sort of like gimmicks and short term sort of things going on, but it's steady growth, right? And I think that's something that we are very proud of. This is not a project that shows like a lot of manufactured growth for like 6 months and then disappears, right? Like we have a 5+ year track record. We always sort of like build the right things the right way, and I think seeing that all come together and seeing a lot of Bitcoin actually deployed on a technology that's already very cheap, very fast, very secure, and there are a lot of like interesting upgrades coming as well. I think the general direction that we are going in is that we want to make sBTC on the L2 more and more self-custodial, more and more trust minimized over time. And there's some very interesting R&D work happening, and that's also coming online soon.
Yeah, well, one of the questions I wanted to ask too, because I know from an analyst's perspective, we talked to a few of those on Coinage, giving us their best calls and insights around kind of opportunities in crypto. And one of those was just kind of seeing the decoupling of stacks versus Bitcoin as it trades. And I wanted to get your take on that because it is interesting to think about this trend of Bitcoin being digital gold, people just kind of being in the HODL camp and having to shift and pivot away from that. And I don't know. I wonder if you look at it as a rather than kind of a either or, could be a yes and situation for kind of how people want to start using their Bitcoin and what that sell looks like. Because I mean, I guess as you kind of package this up and try and sell it to people, what have you made of the way that Stacks has kind of traded more maybe tied to other altcoins rather than kind of being in the Bitcoin camp? I mean, have you thought about that? And maybe has that been a piece of why you're kind of also updating the Treasury tokenomics announcement?
Yeah, so I think the way I look at this is there are almost like two very distinct phases of the trading markets. The first one was the run up to the Bitcoin halving, where Stacks was clearly sort of like this high beta Bitcoin trade. So it was extremely correlated with Bitcoin. And if Bitcoin would move a little bit, Stacks would actually move up a lot more. And I feel like I'm not a trader, but just looking at the information out there and talking to people, I think there were a bunch of these liquid funds who were sort of like using Stacks as their bet for Bitcoin halving. Because it's a higher beta asset and you can actually get more returns. And I think they all ended up doing really well. Stacks was the first project in the industry to actually break the past all-time high, even before Bitcoin's halving. And it was also coupled with this massive upgrade that the project was doing, which is called the Nakamoto upgrade. So the Nakamoto upgrade happened, and my personal theory is that a bunch of those liquid funds, they basically took profits out, right? And once they do that, they've sort of like completed a year and a half or almost 2 year trade. And during that time, Stacks was highly correlated with Bitcoin. So then the correlation sort of like dropped out once they were sort of like exiting their positions. And I feel like in the last month or so, it has started getting correlated with Bitcoin again. Because organically, I feel it is correlated to Bitcoin. But depending on the trading markets and what the liquid funds are doing, sometimes you might see periods in which it behaves differently.
Yeah, no, I mean, it's been interesting to kind of see again the evolution of all this. And obviously, there are more projects building on Bitcoin and trying to build, I guess, ways to leverage some of that value. So it does seem like from, a constant beating everyone over the head with just hodl your Bitcoin, the idea of that changing starts to get a little bit interesting. And I guess, Muneeb, speaking as a founder here in the US as well, we were just down in DC chatting with Hester Peirce and the Crypto Task Force kind of about what Chair Atkins is now trumpeting even louder than perhaps the just hodl your Bitcoin talk of the town, which is US builders can start to deliver some of the value back to their holders and communities. For so long, builders in the US were afraid of offering any sort of like real value when it comes to crypto. And now it seems like finally we are there in maybe that doesn't need to be the case anymore.
Well, and that's what I really do want to flip that so that we're encouraging people who are offering real value instead of making it, it seems like before, if you were offering something of real value, you were more worried about getting hauled into the SEC for an enforcement discussion.
With your guys' history, there was like a long, what was it, 3 years of the SEC looking into stacks and then delivering no action against you guys. And so I feel like you've lived that. I mean, how does it feel to now be on the other side of that, but also see new language from the SEC around, I guess, enabling and emboldening founders like ourselves to start delivering upside?
Yeah, I think it's a very, very positive change. Saks obviously is the first and pretty much like the only project that did a SEC qualified offering back in the day in 2019. And we were pretty silent about it in terms of our experience with the offering and some of the challenges that we faced. And very recently, one of the leaders in the Stacks ecosystems, Alex Miller, he runs Hero, which is a dev tooling company. He actually testified representing the Stacks ecosystem in Congress. And a lot of people really appreciated that. I think he did an amazing job, but also just hearing from us directly, like how we came in and we wanted to do a transparent, regulated offering, and sort of like the difficulties we faced. I think people want to learn from that, and they want to do better. And seeing this sort of like change in the new administration and how they're approaching the projects now is extremely encouraging. And I think there's a reason behind why it's the first time that we were testifying in front of Congress and opening up about our journey as well.
Yeah, and I feel like there are so many changes happening down there that it's kind of tough to keep pace and keep tabs on all of them. But one of those that we heard from Hester Peirce and have heard from her a few times is kind of pushing two things. One being staking via the ETH ETFs, as well as in-kind redemptions for Bitcoin ETFs, which would kind of prevent people from needing to sell, go into dollars and back again, depending on kind of, making these things more efficient to just kind of stay in Bitcoin. I imagine that might be bullish. I'm curious to kind of get your take on how some of those updates could impact the Stacks ecosystem, if there is maybe things that are made simpler from that. Does it matter at all? And how are you kind of like looking at some of those tweaks?
I think the ETH staking is actually extremely bullish for Stacks, and people might scratch their head and be like, "What? Why
Yeah.
is that?" But let me explain. So basically, Ethereum and also networks like Solana, they have a base level yield from consensus, which is typically considered a low risk yield. So if you have Ethereum, you're not even deploying it into DeFi, you're not taking any smart contract risk, but you're just earning more ETH from consensus. And I think once these ETFs start offering that yield, then people are going to notice that, wait a minute, Bitcoin is the largest asset. And there's $60 billion of Bitcoin in ETFs, probably more than that. But Bitcoin doesn't have a native yield. So there's no way to have less risk yield out of Bitcoin. And I think this is where Stacks comes in. Like Stacks is basically the L2 that adds all the missing functionality on top of Bitcoin without changing Bitcoin. Right? And one of those things is being able to earn a BTC yield. So Stacks has a Bitcoin yield, which is native from consensus. And a lot of people really enjoy earning that yield. There's roughly like 700, $800 million locked up in that today, and people are
Yeah.
earning L1 BTC. And I think there might be interesting new financial products that use STX as a way to generate BTC yield in the broader sort of like Bitcoin products.
Well, I want to talk to you about that yield too, because I think it's an important thing to highlight, especially as we see more projects, and by projects, I mean publicly traded companies, like MicroStrategy, now Strategy, leveraging the idea of Bitcoin yield, trying to champion their definition of what Bitcoin yield is. And I think it's important to highlight because we've been through it for people who have been through these cycles before with collapses of centralized institutions, whether it be BlockFi, Celsius, whatever. I think it's important to distinguish what you mean by Bitcoin yield versus the way that it's defined by the strategies and the Michael Saylors of the world, because you can look at that and say, hey, look, this could go wrong if price flips. How levered these companies may be? Will they ever need to sell these assets? Does that hurt people who expect that yield to be there? How do you kind of, I guess, explain to people the difference between what Stacks is doing, where that yield's coming from, and maybe the strategy of the world?
Yes. So I think people should understand like three different things, right? Like one is that with the Sailor strategy, they're not using the Bitcoin at all to earn any yield, right? Their work is more like market arbitrage. They're trying to buy more Bitcoin per sort of like equity share, and it's market arbitrage, right? Like they're saying, hey, we know how to go out and buy and use these different instruments like convertible debt and so on to provide more shareholder value, right? But their Bitcoin stays with them. They never deploy it anywhere. They're never trying to earn any yield on it. Then there's a different category where you have Bitcoin and you try to deploy it into DeFi, which is generally more risky. And you're trying to earn yield in different assets. Maybe you convert those assets back into Bitcoin and try to provide some yield on your Bitcoin basis. And then there's Stacks, which is somewhere in the middle. You are sort of like deploying your Bitcoin, but the yield you're earning could be from consensus, which is a very low risk sort of yield. And the yield is in Bitcoin, right? Directly in Bitcoin. So there's additional. So let's say if you had like 1,000 BTC, in Saylor's case, he can only go and buy more Bitcoin. Whereas if you had 1,000 BTC and you look at Stacks, you're actually earning more BTC on top of it, right? So that's a big difference between the two plays.
Well, in terms of risk too, I mean, when you're talking about bridging Bitcoin into different ecosystems, I do think that has been something you and I have talked about before in terms of wrapped Bitcoin, WBTC, and BitGo being the custodian there. We talked a lot about custody because Chair Atkins now has kind of made it one of his priorities in getting right new custody rules, especially as banks now want to touch crypto. I feel like that is another piece of this too, in terms of what Stacks is trying to tackle in decentralizing some of the pieces around bridging Bitcoin. And I got to be careful about the way I phrase bridging Bitcoin into these other ecosystems, but I guess maybe that's another key element to distinguish between what sBTC is trying to accomplish versus other approaches that have been taken in the past.
Yes. So I think the way to think about Stacks is that we always want to be at the forefront of how trustless can it be to take your Bitcoin from L1 to L2. So the system that we have live today, there's a decentralized group of signers, and you're sort of trusting those signers, but it's open source, it's decentralized, anyone can be a signer. And there are reputable institutions like BitGo itself that runs WBTC on Ethereum, like Figment and Blockdaemon and these large players. So that's the state of the art today. But we're not stopping there, right? Like we're doing active R&D on how we can make this even more self-custodial, more sort of like trust minimized, and some of those upgrades are coming soon. You'll sort of like hear about it, and that's very exciting. So that's where Stacks wants to operate. That we always want to be the most trust minimized way for people to keep their Bitcoin in a programmable environment where they can actually earn yields, deploy easily in applications, and so on. But if you take sBTC to other ecosystems like Solana or Sui, they're not built to be as integrated with Bitcoin as Stacks is, right? So there is some sort of like additional trust assumptions that come in. And initially in phase one, those trust assumptions would be for whatever bridging provider is there that's actually taking sBTC to these systems. But in the long term, you can look into more native minting as well. And again, native minting on Solana would always look different from native minting on Stacks, because Stacks is just built deeply integrated with Bitcoin, and it's just completely focused on basically behaving as closely to Bitcoin as possible. That's not what other ecosystems are sort of like trying to achieve.
Yeah, well, I mean, I almost feel like it's kind of an interesting sell because rather than selling to the Bitcoin, fans out there who are mostly, I think, firmly in the camp of just thinking about Bitcoin being something you just hold and sit there, versus other ecosystems where they're looking for an asset to trade or leverage in DeFi. And obviously, having a Bitcoin over there on a Solana or a Sui changes things. But I guess looking ahead, Muneeb, when you look at kind of these benchmarks that you've thrown out there, what are you most excited about when it comes to, I guess, operating in a new environment where the SEC is not going to block a lot of these things? I don't know if that has categorically shifted kind of the roadmap that you had at Stacks, but it sounds like it may have. I mean, what are kind of those new goals you're looking to achieve, even with the rest of the year?
I think two things that have definitely changed with the new administration and the new sort of like stance that the SEC has. One is that I think with some of the token economics changes that I alluded to, you can more precisely define value accrual back to STX, right? So you can actually have models where at a high level, Stacks is all about making Bitcoin productive. So people are bringing their Bitcoin into the L2, and they're using it either for payments or in DeFi or lending, whatever they want to do. But as more Bitcoin capital comes in and gets used on the network, there are very clear value accrual models where value sort of like accrues back to STX. And I think we can be much more explicit about it now, because earlier this was a thing that was sort of like everyone's unsure that can we talk about this? Can we have explicit sort of like value going back to the STX holders? But I feel like now people generally feel more comfortable. Also, we feel more comfortable because the ecosystem is so decentralized. The SEC already looked into the project for 2 years and gave a letter saying, you guys are all clear pretty much, right? So it's
Which
those
doesn't
things.
happen very often, by the way. You don't really hear about that, especially under the Gensler era.
Absolutely, right. And the second thing that is linked to it as well, that Stacks is extremely decentralized, but it comes with operational overhead as well. So I think one of the other things the ecosystem is trying to do is to have some operational efficiency where, of course, governance is always going to be decentralized. There's not going to be any sort of like centralization in important areas. But just for day-to-day operations and doing core development, doing engineering, there are certain other aspects in the ecosystem where there's needless decentralization overhead. And I think people
Mm-hmm.
can feel more comfortable having more operational efficiency in certain areas. And I think, but from a day-to-day perspective, that actually goes a long way. It's almost like take the best parts of decentralization, but there are certain areas where if you have operational efficiency and people are operating more like a single team, like I think those can be very beneficial as well.
Well, I will just echo that as well with a call to action for people who are watching and want to stack their stack somewhere. Excited to have the Coinage X Dike option on the table now, where those rewards, as you mentioned, founders being more emboldened to share some of the upside here, as those rewards help power what we're doing here at Coinage and fund these interviews and having you on with us, Muneeb. So can't thank you enough for the time, man, and congrats again, and looking forward to keeping tabs on what comes next.
Awesome. Always great to come here and give an update.
Right on. Thanks so much, man. Appreciate it.